Hey, ladies. Let's talk about wealth and life insurance and how you can turn your life insurance into a financial tool that not only protects your family and business, but also grows your wealth. Okay. And now, see, this is truly possible with cash value life insurance. And so, tonight in this live, that is exactly what we are going to explore. And so, if you are new to me or to the channel, my name is Katrice, and I am a licensed health and life insurance broker, paralegal, and your wealth architect. And I help women entrepreneurs and professionals to grow, protect, and secure their finances and build a financial legacy that they can be proud of. All right. So, let's jump into it. Okay. All right. So, if you are running a business, as a woman entrepreneur, especially if you are a solo entrepreneur, it is not easy. Okay. I know this as an entrepreneur, running a business is definitely not easy and it can be very frustrating at times. You're juggling countless tasks like managing employees if you have them, to keeping your clients happy, to handling the business finances. And of course, you have to ensure that the business is growing. But amidst all the hustle and the bustle, there's one key aspect of your financial future that can often over be looked, and it is your personal financial security. Okay. And so now it is so very easy to forget your personal finances need the same level of care and attention as the business finances. And so many women entrepreneurs focus so much on business development that they will neglect their own retirement planning or leave their financial future in the hands of risky or traditional strategies that don't always give them the results that they are looking for. Okay. But now, what if I told you that you could protect your business and build long term wealth for yourself at the same time? Okay. It can be done. And that is where cash value life insurance comes in. Okay. And it's not just a safety net for your family or your beneficiaries in the event of something unexpected or the inevitable, but it's also a powerful tool, financial tool that is designed to help you to grow wealth, to create a tax-free retirement income and add flexibility to your financial plan. Okay. Um, Life insurance, in my personal opinion, really is the foundation to your entire financial plan. Um, because it is that stability that you can build on. Okay. Um, and so now, as an entrepreneur, you also understand the importance of building assets that work for you and not against you. And cash value life insurance can be a very, very integral part of that strategy. Okay. So now let me know in the comments if you have life insurance. And if you have life insurance, do you have permanent or do you have term? And it doesn't matter what you have. I just always like to see the ratio of see who has permanent and who has term. Either way, if you don't have life insurance, that is definitely something you want to get sooner rather than later, because the cost does go up the older you are. And so if you need life insurance, you can book a consultation with me and we can sit down and we can look at your situation and see which one would be best for you. Okay. All right. So now let's explore whole life and universal life. Okay. Because those are permanent life insurance policies. Now, permanent life insurance just means that it lasts your whole life. Okay. It's permanent. Term is where it's only for a certain amount of time. Okay. And so um, there's the two primary types of cash value life insurance. Okay. There's whole life, which is like that's what pretty much everybody knows as permanent life insurance, is whole life insurance. And then there's universal life. Now, with universal life, you have index universal life, and then variable universal life. Okay, so there's three different types of universal life policies. The one that most people know about is index universal life. Okay, but let's break down the differences between the two so that you can choose which one would be the right one for you. Okay. So now, whole life insurance, this is the most straightforward type of permanent life insurance. Your premiums stay level for the life of the policy, and the policy guarantees that the death benefit will be paid to your beneficiaries when you pass away, as long as you keep paying the premium. Okay. Now, one of the unique features about whole life insurance is that it builds cash values at a guaranteed rate. Okay. Meaning that you know exactly how much your policy will be worth over time. And the cash value grows steadily and provides you with a reliable asset. Okay. Now, it's great for entrepreneurs because it offers a predictable financial growth path, which can be useful for planning your future with certainty. So now, if you are somebody who you are risk averse and you don't like a whole lot of instability when it comes to growing your money, then whole life insurance would be great for you. Again, the younger you are, the better. The more you have as far as the cash value. Okay. Now then there's universal life. Now universal life is a more flexible option, and it does cover you lifelong, just like whole life. But the premiums are adjustable, and the death benefit within certain limits. And so, additionally, the cash value in a universal life policy grows based on the interest rates of the insurer's portfolio. So the growth can vary. Now, with index universal life, it is linked to an index, such as the S&P 500. And so your money is not technically in the market. So it protects it from that direct market activity. Okay. Now, universal life is great for entrepreneurs because it also offers flexibility. Okay. Which can be especially beneficial for entrepreneurs who may face fluctuating business income, especially at the beginning of your business until you get things going and things become more stable. Your income may fluctuate. Okay. And so with universal life, the premiums are not fixed, they are adjustable. So it helps you to continue to keep the policy active and going, even while your income may not be hasn't gotten as stable as it can be. Okay. It and it not just on your financial situation, but also on like any life changes. If something happens and you may need to adjust the premium because your kid got sick and you have big hospital bills that you got to pay off, you can adjust the premium so that you can still have your life insurance while also taking care of the needs of your child. Okay. Now, both whole life and universal life policies work by accumulating cash value. Okay. And so a portion of your premium payments goes towards the cash value component, while the rest covers your life insurance costs. Now, I did a whole video on cash value where I broke down in detail how the cash value works in a life insurance policy. And so I can link that here I'll put it in the description, or either I'll do like one of the little cards here What time is it? 9:59. Okay. Let me write that down because I'll go back and I can add a card. And you can click here if you're watching the replay so that you can look at the cash value component. Um, okay. At the card. Okay. You can look at that video so you can truly understand how cash value works. Okay. But here's just a quick synopsis. So, with whole life insurance, the cash value rate grows typically between I'll say 2 to 5% annually, just depending upon the insurer. Okay. Now, with universal life, the cash value is based on interest rates, okay, of the index, okay? Would so it's typically tied to the performance of the insurance company's investments, okay? So the returns can vary but tend to be higher in favorable market conditions. Another good thing about universal life, especially index universal life, is that it has a cap. It has a cap it has a cap, not cap, it has a floor. It does have a cap, but the floor is what's like the good thing about it. Because when the market is, going down, okay, say President Trump just decide, to tweet something, he always on Twitter tweeting something, and he decides to tweet something, or, especially in the economic environment that we're in with the tariffs and everything that's going on with that. Okay. When the market is going down, you're not losing anything out of your policy. So any accumulation that you have accumulated um, in your index universal life policy, you don't lose that if the market goes down. But when the market goes up, you continue to accumulate and grow until you reach your cap. Okay. All right. So here's an example. So say you are in your 30s, say you're 35. Okay. And you purchase a whole life policy. Okay. And so you've chosen a policy with a premium of $500 a month. And so over the years, as you make your premium payments, your policy is building cash value. Now, at the end of the 20 years, you may have anywhere, say, we'll just say $20,000. It's just an example, okay? And accumulated cash value that you could borrow against to fund, if you need it for, things in your business, or if you need it for personal needs like paying for your child's education or covering any unexpected medical expenses, okay? Now, if you had chosen to put it in an index universal life policy, um, then the cash value will grow at a significantly higher rate, um, just depending upon the market's performance. And so the growth isn't as predictable as it is with whole life. However, index universal life does offer you more flexibility and a potentially larger return if the market conditions are favorable. So either way, you're going to get that predictable growth with a whole life, or you're going to get growth that, very well could outpace. It will outpace a whole life policy. Either way, you're going to get that growth. Now, if you're somebody who likes predictability, then a whole life would be the way for you to go. But if you're okay with, not needing to know exactly how much you're going to get every year, but just knowing that you're going to get a substantial rate of return, then, index universal life is the way to go. I don't talk about variable universal lives, because those are in the market, and they are subject to the market conditions. So if you are somebody who you have a very high risk tolerance, then you can look into a VUL. However, it's not something that I really talk about a whole lot because, when it comes to growing your wealth and building for retirement and your financial legacy, I'm not real keen on variable index universal lives or variable annuities or anything variable. I want to know that my money is going to grow and be protected and not actually in the market when it comes to life insurance. Okay. Um, all right. So now universal life insurance, it offers more flexibility, as I said, in how the cash value grows. And so instead of a guaranteed interest rate, the cash value grows based on market interest rates or the insurer's portfolio performance. So this means that the cash value could grow faster if the market performs well. However, it also means that the growth can slow down if the market is underperforming. Okay. But like I said earlier, the good thing about that is that if the market is underperforming, there is a floor with index universal life. So with that floor, you're not going to lose any growth that you have accumulated. Okay. And so that's the good thing about that. Okay. All right. So now let's talk about compounding, because compounding is what really is the driver behind the growth in the in cash value policies. So compounding is what is so powerful. And so as your cash value grows, it earns interest on both the original value and the accumulated interest from previous years. And so this is what creates the snowball effect. And this is where the cash value grows exponentially over time. And so this is why, another reason why it's important, if you're going to get a cash value permanent life insurance policy, it's important to get it as early as possible because of the compounding. Because the longer you have your money in the policy, the more the compounding has to grow and build on the snowball effect. Okay. All right. And so now that you know about the policies, let's talk about how to leverage the cash value. Okay. Because this is the part that everybody's like, okay, cool, cool, cool. But how do I use the cash value? Okay. And so one of the key advantages to cash value life insurance is the ability to borrow against the accumulated cash value. Now, this can be particularly useful for women entrepreneurs who need quick access to capital for business growth, unexpected expenses, or personal needs without going through traditional lenders. Okay. Because it can be a real hassle to go through traditional lenders, especially now in today's economic climate. Okay. And so when you borrow against the cash value of your life insurance policy, you are taking out a loan from the insurance company, which is secured by the cash value in your policy. You do not have to go through a lengthy application process like you would with the bank, and there is no credit check involved because essentially you are borrowing from your own money. Okay. Now, the loan is tax free as long as the policy remains in force and is not surrendered. And so this is a huge advantage over other forms of borrowing that will trigger tax liabilities. Okay. Another thing, you can withdraw. Okay. Um, and in index universal life, especially, you can withdraw and you wouldn't have to pay anything back. You can withdraw up to the amount of premium that you have paid into the policy. The only downside to that is that it will reduce your death benefit. Okay. Now, it's important to note that any loans that you take out from the cash value, if they are not repaid, it will reduce your death benefit. Okay. And so when you pass, okay, and your family goes to claim the death benefit, if you have any outstanding loans, they're going to take that off top before the death benefit is released to the beneficiaries. Okay. So you want to keep that in mind if you're taking out loans to make sure you're paying them back. Or if you're, withdrawing, then just know that it's going to reduce your death benefit. Okay. All right. Now, when you do take out a withdrawal, okay, it could have a tax implication if you take out more than you've paid in premium. Okay. And so if you're withdrawing, you want to make sure that you plan that carefully, especially if you're using the funds for retirement. Okay. So you're taking out withdrawals for retirement, then you want to make sure that you are not withdrawing more than you've paid into premium. If it gets to a point to where it looks like it may be you're you know you're withdrawing, you're getting close to how much you've paid in premium, then you might want to start taking loans instead of withdrawals. Okay. All right. So now having access to liquid, low cost source of funds, that is a game changer, especially for women. Okay. Because our financial needs are often very, very different from the financial needs of men. Okay. Um, we are the primary caretakers of the children. We are normally the primary, keepers of the home. And so it's like our finances don't just go to us. Okay. It goes to the children, to the household, to expenses. It goes, especially if you're single. Okay. And not saying that men don't, contribute to taking care of their kids or whatever. That's not what I'm saying. What I'm saying is that, when the kids are sick or when the kids need clothes or when the kids need something, normally it is the mom that is in the store whipping out her credit card to purchase, okay, or whipping out her debit card to purchase versus dad, okay. And so our needs are just, and not only that, we're not just taking care of our household, we're also taking care of, if we have aging parents, we're taking care of them. And even though they may have their own finances, there are times when you're going to be using your own money um, to help take care of and make sure that your parents are taken care of, or an aging aunt or something like that. And so our financial needs, our money just is spread out a lot more thin than men most of the time. Okay. And so cash value life insurance can be an essential safety net. Okay. Um, and because it's not like traditional loans, you're borrowing against your life insurance policy. So it does not require approvals or complicated paperwork. And so this just gives you more flexibility when you need to get cash when you need it. Okay. And not have to jump through hoops to get it. Okay. Now, when it comes to retirement planning, um, you know, a lot of first of all, retirement planning is really big, and it's why I really stress and talk about it so much on this channel. Because one, as we all know, you see what's going on with Social Security and how they playing Russian roulette with it. I mean, you can even go on the Social Security's website and see that by 2037, it's not going to be able to even give 100% of the benefit to everybody that's scheduled to receive it. So if you are a millennial or a younger Gen X, you don't bank on Social Security as being a source of income for you. And if that's what you're banking on, you are banking on suffering, financially during retirement. Okay. You've got to be proactive now, take control now of your Social Security, of your retirement. Okay. And so you've got to, and not just that, but also you got to supplement your retirement beyond the traditional 401k and IRAs. Okay. If you are a teacher or a nurse and you have a 403B, you're going to need to look into other sources besides that. Okay. Because those, even having those, while they're great to have, they're not going to even replace they're only going to replace half of your income. So if you're used to, say you're a nurse and you're used to making, say, $98,000 a year, you're only going to be getting half of that. Can you live on that? Do you want to just live on that? And so you have to look into ways to create additional sources of income. Okay. And so cash value life insurance can be an excellent option, offering the flexibility to have access to tax-free retirement income. Okay. And so the cash value in your life insurance policy can be used in retirement income in the form of tax-free loans or withdrawals. And I know I just talked about this earlier, but I just want to reiterate the point, because the cash value is growing on a tax-deferred basis. Okay. And so as long as the withdrawals are structured properly, okay, if you're going to be withdrawing, as long as they are structured properly, then you can access the money without triggering income tax. Okay. Again, you cannot withdraw more than you have paid into the policy. So say you've paid, just say $300,000. Okay. You can withdraw up to $3,000 from the policy's cash value without triggering income tax. Now, if you're taking loans, then you can take loans. They're tax free. They just have to be paid back, or else they're going to be taken out of the death benefit. Okay. So you can start taking, like I said, you can start taking loans. Now, this strategy allows you to receive your tax-free funds during retirement, which is a significant advantage compared to taxable retirement accounts like 401ks and traditional IRAs. Now, I did do another video on comparing index universal life to 401ks, and it really wasn't a comparison. It was really to show you how the two work together in a strategy, to where, because you are now having to pay the tax on a 401k when you withdraw, that is taking more money away from you during retirement. And so having the index universal life as another stream, you don't have to pay taxes on that. Okay. And so because you don't have to pay taxes on the index universal life income, that's allowing you, it's helping you to make up for the taxes that you're having to pay with your 401k withdrawals. Okay. And so you want to have those two work in tandem, to help you to fund your retirement. Okay. All right. And so again, one of the biggest advantages of cash value life insurance for retirement is the tax-free nature of the loans or the withdrawals, as long as the policy remains in force. And so this is a major benefit compared to other retirement saving options, which may be subject to taxes upon withdrawals. Okay. And so as you prepare for retirement, you want to have tax advantage income, because that is going to be so very valuable. And you also have to think taxes are going to go up. Okay. Even though they may, wherever they are now, they're going to go up. And depending upon the income stream, it could, you could be taxed in different brackets depending upon how much that income stream is, right? And so that's another thing that you have to take into consideration, okay? And so it's so much more to retirement than just having fun and not working and getting to chill with your grandkids and travel and all of that. You really have to be very strategic when it comes to your finances and taxes, because just because you're no longer working, you're still required to pay taxes on any income that you are receiving. Okay. So you have to be very strategic with that. Okay. All right. And so that is what I have for you in this. And so I hope this, gave you some insight into cash value life insurance and why you should tap into this, why this is something that you should tap into, because it is a great asset to have available. Not just for retirement, but for when you have like emergency situations to come up and you are needing cash, or to even funnel cash into your business during a time when sales might be down, and so you need that cash injection. You definitely can tap into your cash value. Okay. And so if you've made it this far, thank you so much for watching. My goal is to always provide practical, actionable financial advice to help you to take control of your finances and your future. And so, if you want to book a consultation with me to discuss insurance, if you don't have any life insurance at all, and you want to book a consultation with me, you can definitely do so. But if you want to discuss with your retirement or your estate planning needs, you can do so using the link in the description of this video. Also, if you found value, then please do give it a thumbs up, because it does let YouTube know that this content is valuable, and to share it out with more, so that more people can see it. And let me know in the comments, which policy do you feel like would be more beneficial for you? Would it be whole life, or would it be universal life? Okay. All right. And so remember, the way to secure your financial future is to protect it now, because no one is coming to save you tomorrow. All right. Have a good one.